Hi, this is Chris from thetraderguy.com taking a look at the upcoming June 25th trading week. I've got three different currency pairs I'm looking at because they are, for the most part, telling me the same story. And in front of you, I have the weekly euro dollar. You can see that I have the 115 level marked on the chart. It has been very important on the weekly time frame going back for a couple of years between basically the end of 2014 all the way to the beginning parts of 2017. And we have come back and tested a couple times. What I find interesting now is this past week we have formed this nice little hammer here. It's a double, bottom here forced upon the market by these hammers. It's an area where there's obviously a lot of interest. So it does show that there is the possibility of going higher. But I think at this point, or we're going to run into a significant amount of resistance around 118. So I think this is probably a market that is suggesting that maybe euro dollar continues to be range bound. I think 115 is going to be very stringent in its support, though. If we were to break down below there, that would be very negative. When you look at the daily chart, same situation, that would then have you trading basically in this little block here. And at this point, it does look like we're going to try to take back some of that bearish pressure from last week. So we'll just have to see, wait and see on that one. But there are a couple of cleaner charts that you could be looking at. British pound US dollar pair has formed a hammer again at the 132 level. This is an area we've seen some action recently. This is mainly due to the Bank of England being a bit more hawkish than people expected on the statement during the week. And as I go to the daily chart, you can see we formed a shooting star, which I'll get to here in a second. But when I look at this, it looks like, a very bullish sign. Doesn't have to work. You can see that we did break down below that. That in and of itself is a bit negative. But I see so much in the way of noise down to about 130 that I think there's plenty of support here. Now, going back to that daily shooting star, if we can break above that daily shooting star from Friday, then you have the hammer triggering and the breaking of a shooting star, which is very bullish. I would anticipate that this would be a very noisy move higher. That being said, we'll just have to see how this plays out. If you zoom out at this, if you're an Elliott wave trader, this could be the wave 1, this could be wave 2, and if we turn around, this could be the impulsive wave. This could send us much higher. Not so much an Elliott wave trader myself, but it is something that I notice. So I think if we can break Friday's highs, that's a very good sign. And over here in the Australian dollar, very similar situation to the British pound. It's been a bit choppier. Formed a nice looking hammer. I think at this point, though, what we're probably looking at is an attempt to reach the 76.5 level. 75 will be important, so I would be a bit hesitant to get in ahead of that, or I would do so with a smaller move. Obviously, though, if we can break the 76.50-ish area right here, make a fresh new high, that would be very bullish, and that could have the weekly chart extending all the way to 0.80. So definitely a market to watch. The alternative scenario, of course, is that we break down below the 73.50 level, which was that shooting star and has been important more than once. And if that happens, that opens the door to 72 and then possibly 70. So very interesting chart to watch. Australian dollar is very high up on my radar right now. Thanks for watching. Subscribe to the channel, and happy trading this week.